Well, Tata Steel has been a bit of a mixed bag in the first quarter. The top line was largely in line with expectations, but could have done better when it comes to the margins and the bottom line. But once again, the contribution came in from the India business. The standalone operations, as Motilal Oswal says, did see very high realizations, and that sort of drove the strong EBITDA. In fact, realizations for standalone rose 13% sequentially, which is pretty good. The Tata Steel Europe, however, disappointed. That's what Motilal Oswal says. The EBITDA over there was just about 1,530 crores. Their own estimate was 2,670 crores. So it's quite a big miss. But otherwise, brokerages continue to maintain their largely positive stance when it comes to Tata Steel. We have JP Morgan maintaining an overweight with a target at 1,810 rupees per share. Yes, they as well note that the company has managed to post its highest ever EBITDA and the profit after tax in a quarter. This is something not new, by the way. We've been seeing Tata Steel do this for the last couple of quarters, aided by the surge in steel realizations. And this quarter as well, that's what we have seen. The continued surge in steel realization has aided the EBITDA and the profit after tax. Of course, volumes were impacted due to the second wave. The consensus estimates for Tata Steel have increased sharply, and they also see very large debt reduction in FY22. They are confident that both the India and the European businesses will improve from here on. Tata Steel Europe EBITDA per ton was 35% higher on a sequential basis, and they are seeing strong pricing trend as well in Europe. So from here on, European business will also continue to improve. We have CLSA too. They continue to maintain their buy stance on Tata Steel with a target at 1,750 rupees per share. They say that Q1 was largely in line. It is the India business. They as well highlight that it's the India business that has led the beat. And they notice that, the European business continues to be lower. It's the India business that has actually offset the lower than estimate European business. So the standalone profitability continues to surprise CLSA. On the deleveraging front, there's an interesting point. Yes, they did cut the debt by around 5,800 odd crore rupees during the quarter, but the deleveraging was partly impacted due to the build-up in working capital, which the CFO explained was on account of higher steel prices as well as higher raw material prices. ICICI Securities has maintained a hold. They noticed that the sharp reduction in iron ore prices is increasing the profitability of Chinese players in a weak demand environment. The production cuts may provide some supports to steel prices, but may not arrest its decline. So with steel prices expected to creep down, Q1 FY22 miss in deleveraging, that's what ICICI Securities believes, does not augur well, thus adversely impacting risk reward. So ICICI Securities has maintained a hold on Tata Steel.